What's up guys, Mr. Fit to Flourish, and today I wanted to talk clearly about why I use the 2 hour time frame to trade, and we'll get right into it. So I want to kind of show this chart of TripAdvisor. TripAdvisor is actually ripping right now, breaking out, but why do I use the 2 hour time frame to analyze stocks on larger time frames and to make decisions from there? Well, number one reason I'm gonna get right into it is because I saw a good trader on Twitter and then a couple other traders using the 90-minute time frame, and I was like, that's actually really good because, for one, if you're looking at larger time frames and you're trying to guess the overall trend and how to trade, because you really want to trade with the trend is your friend, right? So you want to trade with the overall trend. So here we have an uptrend because we're getting higher lows and higher highs, right? This is Apple, and what you notice is on the 5-minute time frame, there's just too much information, right? If I go to the 5-minute time frame, then there's just way too many bars. I can't really see what's going on. I have to kind of back out way too much to see key levels. But then when I use the 1 hour time frame, it's a little bit better. Okay, and I know there's some people who use the 1 hour time frame as opposed to the 2 hour. Some people use the 1 hour, the 4 hour, and the daily. So the 4 hour time frame just has, in my opinion, just way too little information. Just way too little information. And then the daily time frame has absolutely way too little information. Way too little information. What do I mean by that? The bars, you can't see what's happening in between this move up. So what happened in this move up? It didn't just go, this stock, Apple didn't just go straight up. I need to know what happened on this day. This is Wednesday, July 2nd. What happened? The 2 hour time frame is really good because it's not too much information like the 1 hour, but it's not too little information like the 4 hour or the daily. It gives us an idea of what happened in this session, and every day has about 8 hours of trading, right? Like 7 hours and 30 minutes, but about 8 hours. So that's why they get separated in 4 hour blocks, 4 hour on the 4 hour time frame. But on the 2 hour time frame, we could see what happened in between. Okay, and the reason that that's important is because at every 2 hour mark, we see like these big block orders from institutions and where price is stopping and starting on that 2 hour time frame. On the 1 hour time frame, there's just too much information, so it's like you're not getting it. But on the 4 hour time frame, you're not getting it either because you're just seeing what happened at the end of the 4 hours. But in this 4 hour period here on Wednesday, we saw that we had a huge move up, topside wick, and then we actually sold back off at this price level, and we created what's called a micro double top. So this gives me information about this level here. There's something happening right here, right there. So we closed there, and then we opened right at that same level on the next bar. So that's telling me that there's something important happening at this price point that is causing us to stop there. And then we created a micro double bottom. So what is a micro double top, micro double bottom? Micro double top is just when you open or you close and then you open at the same price point, even though there's these wicks. Doesn't matter. It's telling us that buyers and sellers are agreeing at this specific level that there is a reason. There's something important about that price level that we need to pay attention to. Okay. So when we have micro double tops, it's an area that, hey, we can definitely say that if we close above that, we're going to get a breakout. And then micro double bottoms are areas where price is like, all right, we're not going below, especially when you see what we call bottom side wicks or wicks. So this bottom side wick is showing you buyers are stepping in. And then these top side wicks are showing you sellers are stepping in. And then the closes and opens tell you where buyers and sellers are agreeing that we don't want to go past. Once we do break past these levels, we go into discovery mode, which means price is breaking out and gonna keep going. So here on Apple, we created a micro double top on the 2 hour time frame, and then we closed above it on the next bar. And then now, since we closed above that previous determined area of, hey, we're not going past this, since we broke past that and closed past that, we're ripping now. Absolutely ripping. And now we have another micro double top. So this is another area to watch here on Apple. So this is going to be 213.90. All right, 213.90. We're stopping right there. So we have topside wicks. Sellers are stepping in. We close at this area, so buyers and sellers are agreeing that we should not pay any more than this for Apple. So yeah, that's a short answer of, hey, it's not too much information, but it's not too little information, and it gives us these really good block orders of where price is stopping and starting. And I use these levels to draw my key levels. So whenever I see micro double tops I use them as key levels. And I haven't drawn key levels on Apple for like 2 years. These levels keep repeating. And I've been using the 2-hour time frame to draw key levels, and they act really, really good for the most accurate key levels that I've ever seen any trader have in the world. So I think I have the most accurate levels in the world. Because you could see micro double top, we stop there, and then all of a sudden we start there, and we respect that level the next day. And these levels go back for freaking forever. Okay, they go back forever. We literally react at those levels. Again, another micro double top. We're reacting at these levels. Wicks reacting at these levels. Almost to the penny here, 206.66. Again, reacting at that level. To the penny, reacting at that level. To the penny, reacting at this level. Okay, so it's really, the 2-hour time frame is where you need to be drawing your key levels. How do you draw key levels? I have a video on that, but basically I'm looking at areas where we react to, and then if we have a micro double bottom or micro double top at those areas, it's usually a key level. And then also if we have wicks, if you go to the left on the chart and see how we reacted to that area previously, then it's gonna be a good indicator of, hey, this is a key level. So I use the 2-hour time frame to draw key levels. And also because, like I said, it shows you those block orders. The 2-hour time frames captures a lot of these micro double tops, micro double bottoms, and then the wicks where we react to these key levels. So in short, that's why I use the 2-hour time frame. Not too little information, not too much information, but it gives you a lot of information on where price is going to stop and start, and the direction of the trend. And also you can see areas of consolidation like this here on Apple, where we determined that, hey, this area right here, if we break above this area, the area right there, then this is going to be a breakout. Okay, so it shows you really good consolidation. But again, if we went on the 1-hour time frame, there'd be way too many bars. If we went on the 4-hour time frame, not enough bars. The daily time frame, definitely not enough bars here to show us what's actually going on. And then our volume RSI and then our moving averages here, usually let me go to moving averages. All right, moving averages react really, really well. And the last piece of information I'm gonna give you on the 2-hour time frame, the 2-hour time frame is large enough that it's going to capture market structure shifts. What do I mean by that? I have a pink line, which is the 9 MA. This looks better. So the pink line is the 9 MA. Boom. And then my yellow line is the 20 MA. So when the 9 MA crosses the 20 MA, we get what's called the market structure shift. So that means we're going from going down to now we're going to be going up. And when it crosses on the 2-hour time frame, that's usually a really good indicator of, hey, this stock is not moving down anymore. We're going to start moving up. We're going to get a pretty big upside move. We're getting breakouts. On the 1-hour time frame, it could be false quite a bit, and on the larger time frames, the 920 crossover is what it's called. The 920 crossover works really well on the larger time frames as well, but you can get in on it earlier if you pay attention to that the 2-hour time frame 920 crossover. Okay. So yeah, that's basically why I use the 2-hour time frame. You might want to try it. Look at those order blocks. You'll see like, oh man, this is like the best area to be looking at trends on the larger time frame. That's where you want to look at trends on the larger time frame. I know some people have been using the 1 hour or the 4 hour, but I'm telling you that it doesn't work as well. Try the 2-hour time frame. See if it changes your life. I promise you it will. It's your boy, Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.